Okay, so thank you for joining with us today. And after that introduction of showing you exactly how we do track the markets and how our tracking system works and how we use the archiving and recording, I'm going to start going over everything with you now. This is for September, one of the choppiest months I've seen in the last 20 years of trading, but we still showed excellent results. So I've showed you the disclaimer. Again, let me bring that up here. That's a CFTC disclaimer showing that all the things here, you should read this and understand it. It's here on our site, so you can always make sure and read it again. I'll show you exactly where that is. Right here, disclosure and disclaimer. Very important that you understand this. So with that in mind, let's move on and have some fun here. Now, keep in mind, this is going to go for as much time as I need. I'm going to go through the first few sessions very slowly so you understand the rules and the method that we're basing this on. And then I'll start going off in rapid fire. Now, the advantage is this will be recorded and it'll be up on the blog. So that means even though I'm going really fast, just write your questions down and email them to me. But you'll have the recording very soon, and you'll be able to stop and start and go through it very carefully and learn everything you need. You can do whatever level research you want because you'll have the recording right there. Okay, now the reason I want to go through it slowly at first and then go really fast later is because the recording, I don't want the file to be too large because I can upload it to YouTube generally if it's under about an hour and a half to 2 hours. If it gets too long, then it'll be rejected and I won't be able to make a simple recording. I can always create the file and send that, but trying to upload that to your computer sometimes becomes a little bit difficult. All right, so first let's start out here. We're going to start the webinar now with the exact results for September. It's going to be challenging. Take some notes. It'll be a real brain stretch here. First of all, I told you for those of you who are with us on the Online Trader Central yesterday and everything, you could email me and I would send you a copy of these rules. Most of you have these now who are here attending the webinar. So here are the rules for the Boomerang Day Trader. It's quite simple in principle. Just have some confirming rules. Keep in mind the market is complex and high risk. Regular dedicated practice is needed to succeed in understanding the market's various nuances and pattern sequences. We look for trades when the white line, which is the fast rim of the trade channel, crosses the dynamic trend band number 2. The dynamic trend band number 1 must be the same matching color as the trade direction in the trade channel, and it must be in close proximity. I'll go over this in a minute. I'm just going to cover this with you real quick. That's approximately 2.5 points on NASDAQ between the dynamic trend band 1 and 2. Then you can enter the trade on the pullback to the signal line, which is built in to Boomerang Day Trader. That's our unique feature. It says here, when the conditions exist, a trade is taken on the pullback to the signal line. Now, if the dynamic trend band number 1 is the same matching color as the dynamic trend band number 2, and the trade channel is also within that same direction, and you see a slope of dynamic trend band number 2 is relatively steep, then you can take a second level trade. Now this also applies for any time when you see a new trade channel open up and you have the matching dynamic trend band 1 and 2, you can take a trade in that direction because that is so much powerful bias force on that side, it's okay to do that. Now that may not be quite clearly stated here, but as we go over it, I'll show you the examples. Just take a note of it. If you own Boomerang, you now have it. And look at that. This is all that there is. A few simple rules. Most of these rules involve choppy markets or spike whipsaw action. Hey, that's the field we're in. If you decide to become a football player and you think you're not going to get a broken wrist or a broken ankle at some point in your career, you shouldn't have joined football playing as a career or even as a hobby. You see what I'm saying? If you decide I'm going to be a trader, you have to expect that it's a difficult business and sometimes you're going to get beat up a little. And what do? You recover and you go back. You don't quit after getting beat up once, nor do you try to avoid getting beat up. It's ridiculous. You decide to become a trader. The rules are simple. Avoid trading trades in choppy markets by becoming adept at reading the volume meter with the ADX described in the blog and the resources. It's a simple volume meter. Here's one here that I use. This is what it looks like. 8-period average volume. This is the price. This is on the 6E. 8-period average volume here. Each individual volume. Use a 1-minute chart on these. So each 1-minute candle or bar is going to show you here. And the ADX is shown up here. Again, go to resources and you can build a volume meter, and this will help you. This is one of the steps. There's more, but this is one of the steps to avoiding choppy markets. You want to embrace choppy markets and whipsaw markets and learn how to deal with them. They're always going to be there. No system. It's not the system's fault that the markets are choppy. It's the way the game is being played. You got guys on both sides of the market, some putting on 1,000 contracts or more, and they're going to spike the market around sometimes. The second rule, choppy market conditions often start with fast spike candles, which are larger than intermediate previous candles. In the case of NASDAQ, usually that's about a 3.5 to 4 point candle on our standard 450 tick chart. We use 450 tick charts as a default. That is the chart time frame you want to use. That was how the system was designed, and that's what all these results are based on. Can Boomerang work on other contracts and other time frames? Yes, absolutely. People have been using Boomerang for many, many years. That's why we're the top trading system on NinjaTrader. We have been for many years. Boomerang's been around a long time. It has now just been revolutionized with my dynamic trend bands. So if you're brand new to Boomerang, you're getting it at the exact perfect time to really score some great results. If a fat channel forms from 2 to 3 spike candles or more, do not take a trade into the signal line, because you're usually going to be trading right at the top or the bottom of a fat spike channel, and it's going to reverse and stop you out. Avoid the trade or consider a trade on a pullback to one of the dynamic trend bands if the colors match and you're looking at 50% or better into the fat channel. And I'll show you that in a minute. We will be going over literally dozens and dozens of examples of this because it occurs all the time. It's no big deal. And then the final rule. So far we only have 2 rules here. Here's the third rule. Do not trade against a steep slope of the dynamic trend band number 2. Why? Because that's a trending move, which I'll show you in a second. Let it flatten out a little. Let the current price run. Let that steep slope flatten and everything. Now, having gone over these rules, I'll keep this handy because I'll be bringing this back into the picture on several occasions to show you the rule, to verify the rule. You with me on that? Okay, that having been said, let's pull this off here. And now we're getting ready to start. If you notice here, this is 9/3. 9/2 is a holiday, and this is the first trading day of September. So now we're going to roll up our sleeves, and we're going to get into it. This is for NASDAQ. Our system is based on NASDAQ, not on gold or crude oil. All those. A lot of those markets will be active, and then they'll fall asleep for a few weeks. Then they'll wake up again. You can trade those markets with Boomerang Day Trader. We have hundreds of traders that do. But the system I'm showing you today, if you want a career where you want activity every day and you want to build a steady winning system, just use NASDAQ and follow our exact program. Start making winning trades. Get a couple really good months behind you. Then maybe you can experiment with a little with gold and crude if you feel the absolute necessity. But I want to say to you one thing. A chart is a chart is a chart. You wouldn't know if I didn't have this up here. You wouldn't know if this was gold or crude oil or silver or cotton or soybeans. A chart's a chart's a chart. You want a chart that sets up, gives you active winning trades every day, and gives you an opportunity to trade the markets and specialize in that particular market. That having been said, I want to get that out of the way so that traders understand we have a very specific exact system here. We're trying to help traders develop a career, not have 5 charts up in the market and they're flipping around each one, and they don't really know any of the markets that well. They're just totally going based on a chart pattern that's forming. That's not a very good way to trade. You need to specialize in your market and understand how to trade it, because you'll be going there every day. It's like having 3 jobs. You know, you can't really specialize in one thing if you're a printer, a plumber, an electrician. You can learn a little about all of them or a lot about all of them, but you never really become a total specialist. We're showing you how to specialize in a winning day trading contract that has activity every day. Okay, so this is all the Globex action here. Let's get started. As mentioned on the trade sheet, which most of you should have by now, here it is here. We look for trades when the white line crosses the rim of the dynamic trend band number 1. That's occurring right here. However, if you remember the rules, because I know you're paying really good attention right now, stay awake with me here. We're going to do this for a couple hours. This is called a steep dynamic trend band number 2. The white line crossing over here is a sign to watch for a trade. What we look for is the spread between right here, after the crossover, the dynamic trend band number 1, which is 309.6 and the dynamic trend band number, or that's number 2, and number 1 is down here at 309.250. Now, if you notice, 92.50 and 96.75 is a 4-point spread. If you recall from the rules, which I will reference again right here, that is we look for a spread that is approximately 2.50 points or less to verify the trade. That gives the trade maximum potential of results. Here's the crossover. Now you see the red line. This is the outside rim of the trade channel. This is called a trade channel here. This arrow alarmed and marks the trade channel, a new buy channel in this case, and it's shaded green. The red channels, the sell channels, are shaded darker red color. So with this spread right here tightening, you can see 93.75 and 95.75. That's a 2-point spread right here. This blue dot here, or this one, the first or second one you want to get, the pullback to the signal line is your entry. An alarm will go off in Boomerang, an audible alarm, and it'll instantly print on this signal line within a millisecond. You go over and you hit, here's what it looks like. This is called a chart trader. You go over, when that happens, and you hit buy market. It'll automatically bracket your order with a 3-point gain and a 2.5-point loss. So this is the beauty of NinjaTrader. It's a fantastic system. Immediately, your order is bracketed right here at this entry. Now, we're going to show 97.75 is your entry. Now, keep in mind, you have a 2.5-point stop, which would be 92.25. Didn't even get close to that, and then they ran up. So you would have taken a 3-point gain at 3,100.25, right up here. Do you see that? Now, people are going to say, what about all this move up here? Well, I know that. That can be caught by using the dynamic trend band as a trailing stop. And you can follow the market all the way up there. But what I'm showing you today is a professional way to go in and scalp $260, $240 on each trading move and limit your loss to about $200. You see that? And we're going to do that 5 to 8 times a day. And after a pleasant day at work in the nice, peaceful markets, I'm joking, of course, you're going to stack up a nice winning day. It's a day at work. You get into this concept instead of rather trying to be the guy who catches the big moves and all that. You're going to catch some of those, especially if you get adept. Why not just follow the exact system I'm showing you? Stack up 5, 6 winning trades with a $240 gain and go home with $1,000 after commission. You see, it's called a day at work. If you go to work every day, you show up, follow the system. My God, I showed you our results here. After a month, you would have had $18,000 after commissions with losses and everything stacked up. I'm Going slow here to start out, but pretty soon this thing's going to get fired up. Winning trade number one. Now we're watching for the next trade setup. What happens here? The white line crosses the rim, or the white line here crosses the dynamic trend band number two. A little quiz for you. What's wrong with this setup? That's right. I'm glad most of you got that. The dynamic trend band number two is very steep right here. And whenever you're coming off a large, fast move, you got to let that market flatten out a little bit, because otherwise there's going to be problems with the trade. Well, just as typical of most larger scale moves, the market starts going into chop mode. And you say, well, here the dynamic trend band, and they're close within that spread, so wouldn't you have gone short here? No, because the spread right here, right after the rim is crossing, the spread here is 850 to 1075. Yeah, it's within that realm, but again, this is steep, and look what's happening here. You're getting this choppy whipsaw action. Notice some multicolored things. Right away, the minute you see the candle start flipping and changing, it tells you to just cool it and wait and see what happens. It's the end of a move. You wouldn't want to get traded here. Or if for whatever reason you thought, okay, the spread's tight here, I'm going to go short right here, then you would have been stopped out. I think you would have. Let's see, 7, 10. Yeah, you would have been stopped out here. So that's no big deal. But that isn't a correct trade here, because you got a steep dynamic trend band number two. It takes a little skill to learn it, but I know you'll be successful. Now keep in mind the dynamic trend band is also blue or bullish here. So what happens is a new channel opens up here, a new buy channel opens up here. The dynamic trend band turns blue here, which is a bullish sign. So you got what? Matching dynamic trend bands and a new buy channel that allows you to buy a pullback right here to the signal line. As long as these two are matching, you can go ahead and buy this pullback to the signal line at 09, and they ran up to 13. So 2 winning trades in a row so far. Now what happens, now that you have the dynamic trend band number one under number two, that tells you the bias is definitely bearish, and watch out for that. New trade channel opens here, sell channel. A pullback to the signal line occurs right here at 31.05, and down they go to 31.25. So there's a third winning trade in a row right here. This is like a second level trade, but not really, because the upside choppiness had not resolved itself until they got that final blast to the upside. So 3 winning trades in a row there. Well, now what do? Now we're watching to see what happens here. And what you find is that here's the white line. This is a regular kind of trade here, whereas a white line is crossing over the rim of the dynamic trend band number two, and you get a pullback to the signal line, but look at the spread. Let's see what it is. 6 1/4, 275. So you would have not taken this trade because the spread here is too wide. Do you understand that? I hope you do. We wait until this spread is tighter, 2.5 point area or less. So you would have, quote, missed a winning trade here. It was definitely a winning trade, but the spread did not allow you to take that trade because it's too wide. Now you have a counter reversal, quick reversal channel to the sell side, and then a buy channel again. Well, what's going on here? Number one, the dynamic trend band number one's on the same side of the buy side of dynamic trend band number two. They both match colors, so you can take this pullback right here to the signal line at 775, and they ran up to 31.12. So there's our 4th winning trade in a row. Now, I hope you understand that. This is all being recorded, so you'll be able to go back over this and you can ask me questions. This one was avoided because the spread was too wide. This one here was not a trade because the white line had not crossed under the dynamic trend band number two, but the new trade channel that opened up again was taken because both the dynamic trend bands were matching color and on the same side of each other. Do you see how that works? Now, keep in mind, we're only 2 hours into the trading day, And we've had 4 winning trades in a row. Yeah, I know it's been challenging because these markets flip around, but we're following very strictly and clearly the exact rules of the system I showed you. And your reward for doing that and not getting emotional and making up your own trades and making up ideas is 4 winning trades in a row. Let me just quickly run to my calculator. 4 times $240. After commissions, you would already be up around $900 after 2 hours of trading in the day, and we got lots more partying to do here. A lot more action. Here it is. White line crosses under the dynamic trend band. The dynamic trend band is the matching color up here. This has to match if we're going to do a white line crossing or the DTB. Number 2, you got to have a matching color. And what else? A little quiz for you. That's right. I'm glad you got that. We got to have the spread at 2.5 point area or less. The spread at the time of the white line on this candle right here crossing is 7 even on number 1, trend band number 2, and 950. Exactly 2.5 point spread on the cross over the white line. That tells you go ahead and trade at the pullback to the signal line, which is alarmed and dotted right here, which would have been around 3106 even, would have been your short. And without any pressure on that trade, you got a blast to the downside here, easily picking up 3 points for our 5th winning trade in the row, now up around $1,200 or so for the day. The market goes ahead. You got a steep dynamic trend band number 2. See, it's the same patterns over and over repeating. We show you how to navigate your way professionally through the markets on NASDAQ using the Boomerang Day Trader system. So what happened next here on this one? Well, this market turned pretty darn bearish. You have a white line crossing over a steep dynamic trend band. And again, it's one of the 3 simple rules that are involved here. We're avoiding choppy markets. We're watching for fast spike candles. We're watching for fat channels, and we do not trade against a steep slope on the dynamic trend band number 2. Wait for a flattening of dynamic trend band number 2. See that? So we're merely applying the simple rules right here. That's too steep. You got to wait. Well, right here now, the spread, you've got a buy channel here, a counter sell channel where the white line never crosses over. Nothing's matching up. You got a counter buy channel here and a pullback to the signal line. This technically would have been a trade here at 96.5. You might have got filled right around 96.5 or so. They ran up to 99, missing our 3-point target. And again, this is a mechanical system. You might have jumped out with 1 or 2 points gain on this. I don't know. But the mechanical system that I'm using to track and record the system would have missed catching 3 points here, and indeed with a reversal red spike, you're long at 96.5. You get a 98.50. You get a 4-point gigantic spike candle lower to 94.75. You're long at 96.50. Hello, exit market. Get out of that trade. This is whipsaw. This is bad news for the long side. So you got stopped out with less than a 2.5 point stop, but let's say it's a 2.5 point stop. So we got 5 winners in a row. We're rolling into mid-session on the first trading day of September. You've got 5 winning trades in a row and 1 stop out. So now we have a sell channel and we're watching to see what happens. Well, what do we have here? We have the market coming down in a new sell channel. We have the dynamic trend band number 2 turning magenta here, or bearish. And we have this is our first example so far in our system here of a fat channel. Whenever you get like a 4-point or higher spike, 3.5, 4-point spike, that's going to form, by the nature of that fast spiking, what I call a fat channel. See how wide? And we do not take trades on the bottom of fat channels or on the top when they form to the upside. You have to wait for a pullback. Well, what do we have sitting right here? Let's pretend, okay, let's go over to the right side. Here's what we're seeing in the live trade action here. This trade got stopped out. So we say, okay, first thing you do is you start chanting, so what, so what, so what, who cares, who cares, so what, who cares. It's just trading. You got to get that in your head. You have to have the right mindset. So just start repeating that affirmation. So what and who cares? Okay, well, with the bearish dynamic trend band up here and the bearish dynamic trend band here, that suggests you have a sell channel. You can take a trade within that sell channel. Where would you take that trade? Within a fat channel like this, on a pullback to either the dynamic trend band number 1 or the red line. You can see right here at this time, the price went exactly the dynamic trend band, so you would have nailed them short there at 94, 93 half 94, and I'll just tick this forward. Let's see what happened. Jumped up a little bit, and then they collapsed. So 6th winning trade in a row and 1 stop out using that method. Did you understand that method? We had a fat channel with a new spike move to the downside. So we're not going to trade in that channel. We're going to trade on a pullback to the dynamic trend band number 1 or the red line. In this case, they were both in the identical same area. Now, as far as understanding how the markets work, this is another advantage of Boomerang. Whenever you see this dynamic trend band number 1 crossing over the red line, that is about 80% of the time a sign that there is going to be a surge in that direction, which is exactly what we got. So when you got in this trade right back here and you're a little nervous, let's say you get short right here at the dynamic trend band, but you see this crossover occurring here, that would have given you extra confidence to hold that trade short for the eventual surge lower, and quite a surge it was. Now, what if you didn't use this method to apply to the trading and you just waited? Well, that's excellent, because here's what would have happened. White line crosses the dynamic trend band number 2. The spread is at 90 half and 93. That's 2.5 points, telling you go ahead and take the next pullback to the signal line. We always trade only at the pullback to the trade signal line, which is this thin dashed line here. So we would have gotten short using the method here. If you didn't trade this fat channel method, you would have traded right here, 89.5, and there was your 3 points there. If you traded here at the signal line, you would have already captured the 3 points for the 6th winning trade in a row. Now, if you're one of these tricky fellows like me, and I trade up here and I get 3 points, and then I see this setup again, I'm going to take this trade too. However, we're not recording that in the overall results for month. But if I see that, I'm going to trade both those for sure. I've been trading 24 years, so I developed this system, so I know it really well. I look down here, I see all the bias indicators are red. I'm going to trade that also. All right, so now that occurring, we got a dynamic trend band number 2 is getting very steep here. So what is the rule? Anybody know? And again, we get out. This is a mechanical system. We're using a 3-point exit, 3-point gain, 2.5-point loss. I had mentioned that before, and it's stated in the system that's written on the web there. Okay, steep dynamic trend band number 2. That means avoid trades against that. Don't take long trades. Here's one here. Don't take it. Besides, the spread's too wide, and the color is bearish. Both of these colors are bearish. Don't trade that. Do we trade this trade here with the white line coming back down? Are we going to look for a second level trade here? Normally, yes. However, and again, I'm not making this up as we go along. You've seen the rules. Choppy market conditions usually mean a 3.5 to 4 point spike candle. Here's one here. 85 half to 82.25, 3.5 points approximately. Most likely you would have been a little reluctant to get involved in this whipsaw here. But just let's say you went and took this short here anyway on this pullback to the signal line. You got this spike candle, got you emotionally revved up, which, hey, welcome to the wonderful world of trading. That's what happens, and you make mistakes. So you got short here, not using common sense and thinking, uh-oh, we could get some whipsaw. But it would have made sense because you got a steep dynamic trend band number 2, pull back to the signal line at 84, 87.75, boom, you're stopped out. So let's say you got stopped out there. You've got 6 winning trades in a row, 2 stop outs, and now down they go again. Well, this would have been a third level move. I know it was a continuation of this, but the whipsaw knocked you out. You're not going to trade this. And just as an example, this is a fat channel here, so you're not going to trade down here in the bottom of the fat channel. Remember that rule? And other rule is, and this is all in this stuff here, no third level trades are taken. Rule number 4, no third level trades are taken. So regardless of this panned out or whatever, and it was a fat channel, you would not have taken this. So we're almost done with session number 1, and I don't want to go too long, so I'm going to fly through the rest of the month. It's going to be quite a lot of work, but I'm going slowly through day number 1, so when I start flying through these trades, you're going to see how it pans out. So what have we done here? Well, now you're waiting for this steep line to flatten out. Now think about this logically. Now the system that I'm showing you here is going to take every trade that's according to the system. You've just had 6 trades in a row. You just hit a massive pocket of whipsaw coming back after the holiday on day number 1. You've had 6 winning trades in a row and 2 stop outs, which should be 4 winning trades times 240. You know, after commission, you're up about $900. Might be a good time to take off. You know, take the rest of the day off. Say, look, this thing is getting kind of crazy here. But if we're just going mechanically, let me show you what we would have done. And then we'll finish this day, and I'm going to start flying through all the sessions. Got a lot of work left to do here, so stay awake. You got a cross over here, a pullback to the signal line with a tight spread here. You with me? 81 ran up to 84.50, another 3 points. No white line is crossing here, therefore no trade. Here's a spike move up here. Notice this candle, 78.25, 82.5. Huge 4-point spike candle. What does that say? Caution, whipsaw. That's all it says. It doesn't say buy or sell. It doesn't say panic. It doesn't say get emotional. It just says stand aside, caution, whipsaw. Sit and wait and see what happens. Well, what happens? The dynamic trend band right here, let's get over to the right side. This is what you're seeing on the right side of the market, turns bullish. It turns blue. You've got up channel, down channel, up channel. This is all whipsaw. I told you, September was the worst whipsaw month and spike choppy month I have ever seen in my trading career. The month I'm going over with you now is the worst, choppiest month I've ever seen in 24 years of trading. Okay? So take that serious. You have to be aware. This is the market. This is your environment. This is your football field that you're going to go on. You're going to go on the basketball course. That's your field. Who are the players? What are they doing? How good are they? Are they wimpy and easy to beat, or are they going to be tough guys? Are they 3 feet taller than me? You got to know what's going on. Duh. It doesn't make sense? This is your field. You've got to know what's going on. What government reports are coming out? What's going on? You know, are they starting more wars? Are they, you know, are resolutions occurring? Like today, my daily directional forecast called for a bullish day today. The market coming in the close here, up 323 points in the Dow. I had called for a bullish day today. I thought they'd hit some resistance up around 71, which they did, but didn't last long, and the mega bullish tape shot the prices higher. Okay, so here we got whipsaw. So what do? what do you got now? You got a matching dynamic trend band number 1 and number 2. That tells you, and number 1 is above number 2. That tells you it's a bullish move. It's an hour before the close, and you just have to trade. I understand. I'm the same way. If there's action, I want it. I want to get in. Well, after some whipsaw, we now have a nice move up here, creating another buy channel. Prices are moving up. Channel's getting a little fat. But you see these matching dynamic trend bands and the persistency of this. You can either take a pullback to the sig line here at 86.50, which would have rewarded you very quickly with a 3-point gain on the trade, or just have stayed aside. They ran up substantially higher. Now you're coming into the last half hour. Now I'm going to start speeding things up for you. Again, you're going to have this on recording. You can take the recording and sit down on a Saturday, whatever, and just click through it really slowly and listen to what I'm saying. I'm talking a lot of stuff here. Everything I'm saying is relevant. I'm not going to waste your time or mine. Everything I'm going to tell you, there's a lot of hidden gems here. This is how you trade the markets. If you had a blank white chart here, you wouldn't know what to do. I'm giving you exact, crystal clear rules and methods to read the market and trade it, not just some goofy push-button system where they say, our multitude of indicators give you one crystal clear signal. They're not showing you how to read the markets. They're not accounting for all the conditions that can be present in the market. Look at how Boomerang shows you with the different changes in candles and dot colors when whipsaw is present. This is simply saying stand aside and wait. Well, what happens? Coming into the close, 15 minutes before the close, and this is only because I'm showing you mechanically how the system works. Would I have taken a trade into the final minutes? Probably not, but maybe. Dynamic trend band crosses over here. You get a new sell channel, a pullback to the sig line here at 88.75, which holds the stop, and down they go to 84.5 for another 3-point trade, and then we end the session. Okay, there. That was the first session. That showed 8 winning trades and 2 stop outs on that one session. I didn't make it up. I just went over it exactly according to the rules. Your skill when you buy Boomerang and get in this is to develop your skill level to that point where you become like the Michael Jordan of Boomerang, right? You put me on the basketball course, and I can do so much with that ball and the court and the field that's there. I mean, if it's just me alone. Now Michael Jordan comes out and you hand him a basketball, my God, he's going to be shooting free throws and swishing every one of them. He's going to come up and do all these layups. You know, it's a different thing, but that's called skill development. He worked hard to get that, and I'm advising you that with Boomerang and your applied skill development and getting rid of that push button mentality of I should just be able to push a few buttons and make $20,000 a month. It ain't going to happen. You've got to develop your skill. Now we're going to start flying through the month. You can stop and start this on the recording. I took the first session and went nice and slowly. Now you're an expert. Those of you who are sitting here and rolling with this on me, you're now an expert on Boomerang, and you're an expert on how to use Boomerang to trade the markets, right? Okay. This is all the pre-market. I do not recommend you trade around the opening. It's what a lot of the guys on the floor call the amateur, the amateur time. You know, all the desperate amateurs got to make a position on the opening. I don't know why, but they do. So you're waiting until 5 minutes after trading. The market is still bullish. You got a steep line, resumes up move here, new buy channel, all the colors matching, pullback signal line, one winning trade here. Steep line, you're waiting for things to flatten out. Market goes choppy, which is typical. We saw this the day before. It's always typical at the top of a long stretch move to expect choppiness. Don't try to dive right in, just wait. Now you've got a matching dynamic trend band here. Market takes off. If you saw this in time and you got this, you could have bought them here for the second winning trade in a row. Same thing happens. They pull back under this steep dynamic trend band, and the market doesn't go anywhere because it's still, this is not a trade. Why? Because both of these are blue. You see that? There is no trade here. Don't think that I'm not showing it a losing trade. It's not a trade according to the system. both are matching blue, that means buy on a next buy channel, which is right here by the pullback to signal line, which is right here at 19, and they shoot up to 28, 10 handles higher. Could you have caught more of that? Sure. Just follow the dynamic trend band as your trailing stop all the way up. You can, on a minor level, you can also use right in the middle of that is the trade signal line as a pullback stop area. So right in the middle of the dynamic trend band and the trade signal line, you can use as a stop out area right in here if you're going to try to trail them up. Take one or put on 4, take 1 or 2 off here, and trail the rest up. If you want to do that method, that's okay. I'm just showing you a simple mechanical way to make a steady income. Steep trend line here, pullback. The white line crosses over dynamic trend band. The spread here is 26 to 28. This authorizes you to go ahead when the color matches to make a trade right here, pull back to the signal line, 24.50, and they hit them hard to the downside, 21.25 for a 3-point gain. Choppiness sets in, of course. And at top, you know, this is long. Look at this move here. It's a huge, huge, huge stretch to the upside. Expect choppiness. You would have caught this spike lower here. Dynamic trend bands are matching here. You might have caught this one here. This is hard to say. They were matching at the time. You could have caught this spike up here. What about this one? Matching dynamic trend bands here. Notice that. Coming into the close of this second session. Notice how quickly we're going through the second session. I got to start flying through this because I don't want this to go too long. Pull back to the signal line at 25.50. Whipsaw comes in. You're still holding the stop. 25.50 go down. You start seeing this whipsaw. You just want to get out of this trade. You're going to take a small loss in this trade here. This one here, nothing going on here. The white line crosses. The spread is thin. You're still in a topping phase here. You just came out of a whipsaw phase. This candle here is running 25.25, 27. You might have taken this trade. You'd have gotten stopped out. I marked it as a stop out in the recorded records that we have here. Coming into the final half hour, the matching dynamic trend bands, new sell channel, pull back to the signal line at 23.75. Down they go. So for this session, I'm losing track. I think we had 4 or 5 winning trades and 1 stop out. Here's the final minutes of the trade of the day. I don't expect you would have wanted to trade this. It's too close to the close, but there was a whopping run up into the close. All the signals were there. You had the dynamic trend band crossing. You had the new buy channel. Pull back here, but this is exactly at the top of the hour, the NYSE closing. You could have caught that trade for a big run up into the close and then into aftermarket. Next trading day, so now we're going to start speeding up a little. We have to. Here's the opening. Leave the opening alone. Wait and see what's going on. Okay, white line crosses here. Now, as the white line crosses here, the spread at that time was 30 and 26.75, little too wide. See that wide? You can just glance at it and see it's too wide of a spread. You got to wait. Market moves up now. The spread right here is 30 and 28.25. Now you've got that 2.5 or less spread. So on the pullback to the signal line right here, you get long at 32, and they shoot up to 37. 3-point gain there. Now you start getting some whipsaw here. Look at these candles. You just go in and measure them. 34.75, 30, 25, 4-point spike candle. It's 31.50, 3.5 points. Still, spike candle. It just says caution. Don't be so anxious to trade. You'll get whipsawed. White line crosses the dynamic trend band here. With the spread really wide, there's no trade here according to the rules. Not because I think, oh, it's a trade that it got stopped. No way. The rules don't let you trade this. Now, if you're just making stuff up and you want me to have more losing trades in the system for some problem you have, that's something else. I'm just being frank with you. But this is not a trade according to the rules. Here's a trade where you have the white line whipsawing around here. This is called whipsaw. It's not my fault. It's not Boomerang's fault. The market is whipsawing. I told you it's the choppiest month I've seen in 25 years of trading. It's terrible. However, here's the crossover again. White line crosses over on the downside. New sell channel. What's this called? Little quiz for you. That's a fat channel. That's right. Thank you very much. Here's a fat channel. These spike candles, first of all, tell you caution. And you got on a 450 tick chart, 1, 2, 3, 4 spike candles of downside. That's going to create a fat channel. You do not trade at this pullback of the signal line. Where do you trade? Come on. If you're paying attention, you're with me on this. I told you we were going to work hard and take a lot of notes, so come on. Where would you have traded on a fat channel with matching bearish dynamic trend bands in a new sell channel and a slope going that way? Where would you have traded on a fat channel under these conditions according to the exact simple rules? That's right. You would have traded at the red line or the dynamic trend band number one. In this case, probably the red line, because so much spiking is going on. You want to get as good of a pullback as you can. Another easy way is to take a quick measure about halfway through the fat channel, which is right around here. There's a dynamic trend band. There's a red line. So if you had traded short right in here, say 30 even, 30 quarter, they spiked them down to 24.75. There's your shorts. So that's our second or third winning trade in a row. Again, I'm trying to teach you here, so I can't remember all these. I'm not recording. I'm doing this very quickly. I got to go even faster. So there, our second or third winning trade in a row. Here's another one here. Now, spread is tight. White line crosses over. Yeah, we got spike candles. I know that's a caution, but you know, you want to make some money. We got to get them going here. Spread is tight. Dynamic trend band is right. The new channel, everything's there. Buy a pullback at the signal line, and that spike worked in your favor to give you an instant 3-point gain on the trade. 4 winning trades in a row on this spiky day here. More whipsaw. White line crosses dynamic trend band. However, when it crosses, look at the spread here, 29 even. That's why I use these cursors, so you can see. Otherwise, I can't show you on a pointer. 29 even, 31.50. Bought it. That's, let's see, 29, 30. Yeah, that's about a 3-point spread. It's too wide. What about here on the first pullback of the signal line? What's the spread? 29 and 31. See how that works? The spread, it's going to happen quickly. Spread is tight in here. So you go, okay, that spread is fat. You get good at this stuff. You know how to measure this real quick. Buy the pullback of the signal line at 27.75. Down they go to 25 quarter. Whoa, 2.5 points. And then what happens? A whipsaw comes back in. You got to get out of this trade. It's not, you know, the minute you see a counter green candle here or a pullback up here to the dynamic trend band, you got to get out. So a minor, what shows is like a quarter loss in this, very minor loss, break even to 1-point loss. Then the whipsaw starts again. What do? Well, stand aside probably. However, with the white line crossing here, you can see the spread is very tight. Let's say we're here live in the market. Now, first of all, notice gray candle, red candle, green candle, red candle, gray candle, dark red. It's telling you be careful. But if you decide, well, I see, excuse me, a pullback of signal line, white lines over there, the spread is thin. I'm going to buy them here at 28. They run up to 31.5. See that? Second level trade. White line holds above the dynamic trend band. The dynamic trend bands cross. See the crossing right there? Which is what? Remember the rule I told you a while ago? When you see those matching and crossing, it's a surge alert. New buy channel opens, a pullback to the signal line, and up they go. It's like 4 or 5 winning trades in a row, 1 stop out. You have the white line crossing here. The spread is tight. Pull back to the signal line, 29.75, and down they go. They held the stop. Down they go. Excuse me. Okay, next day. Now I got to start really flying through this. Again, I don't want it to go too long. I may not get the entire month covered, but you can see it's the same old routine every day. And you want that. It's what I call boring profits. You're only going to make 1 or 2 trades in an hour's time. So you're going to be sitting there and doing what? Waiting for the exact setup. I do it every day. I've been doing it for 25 years. You just sit and wait for the exact setup. If you want trading to be exciting, go ahead and just guess on trades all day, and you'll lose a lot of money, and you'll have a lot of excitement. But at night when you're sleeping and you wake up in the middle of the night and you start pounding on your bed and you're going, oh, dear God, what's going on? You'll finally, the pain will cause you to face that you're not trading correctly and you need a winning system and you need to become disciplined and follow exact rules like all the other professional traders who went through the same thing you're now going through. It's just a matter of time before that pain either kicks you out of trading or it forces you to become very militantly disciplined in learning how to trade. That's why the military stresses discipline. They're sending you out into a battle zone. You don't go to military training and say, oh, I love being a soldier, the prestige, the girls, you know. And then when they send you out in the war zone, you say, well, Sarge, you got to promise me I won't get shot or no snipers will come out of the nowhere or put a bomb under my truck or anything. They don't guarantee you that. You became a soldier. So you got to get busy and follow the discipline and be responsible for that environment, which is a war environment when you're sent out there. Here's the opening. We don't trade around the opening. Just let it fly. You can see it's a bearish formation because you got what now? Both dynamic trend bands bearish. So when you see this, obviously you're not going to buy. You're going to wait for what? A sell channel to open. There it is. So the sell channel opens. Do you dive in? No. No. The rule is wait for a pullback to signal line. That gives you maximum force on that side of the market. The market ticks down a little, pulls back a signal line. You'll hear your alarm right on Boomerang. Off it goes. It's the Roadrunner sound. It rings. You see the print here. You go short at the market. I already showed you this. You go right up here and you go sell. You click this once. It puts a bracket for 3 points in the downside and your 2.5 point stop in the top. You're short, and look at that. Huge runner to the downside. As I mentioned, you can use the space between the dynamic trend band and the trade signal line as a stop out area if you want. Maybe your max would be the dynamic trend band, or in that space as you're getting the trade going, as they start really taking off the downside and the two start tightening up, that's where you want to get out. But the ultimate bottom is going to occur. Look at this. It's magical. Right when prices cross over the dynamic trend band number 1, that's going to be your signal that the market's pretty much given you all it can. So some of you are going to catch those runners if you go for it. Otherwise, you got 3 points in that, our first winning trade in the row. So what's the next rule? Same old routine, guys and ladies. Steep dynamic trend band, extensive long move. What do we think? You should have it written on your desk in big letters. Long extended move, steep dynamic. Expect whipsaw. Expect whipsaw at the end of the move. Don't go jumping in right here. Oh, the white line crossed over the dynamic trend band. I'm going long. No. Don't do that. Why? Because first of all, the spread is wrong. The spread is too wide. You got a steep dynamic trend band, you see? So right there are two simple rules you would not have gotten in this trade. No way. Even with the red line crossing over, the spread is tightened up, but the look at that dynamic trend band. It's way too steep. And what do you get as a result of that? Whipsaw, especially on a big move like this. So what are you going to watch for? Well, this is still magenta, reddish colored. If this dynamic trend band turns magenta and a new sell channel comes in, I'm taking that short there, right at that level, 1075 for another huge move to the downside. The steep dynamic trend band tells you there's no way this thing is over quite yet till prices start crossing over this after everything gets scooped up and moving up here. So the matching dynamic trend bands here tells you go ahead and short this market right here. Now look what happened. Here's the bottom. This is when you see a bottom. Everything bottoms out. Notice how the prices, once again, they cross over the dynamic trend band number 1 after following a stop under the dynamic trend band and using that as your trailer. Now they get crossing over. You get a new buy signal here. The white line is crossed over the flattening dynamic trend band number 2. You can just put your cursor up there. You can see it flattening. You push up here, see all that space? I call that a pizza. It looks like a slice of pizza. So you get it down here and you see, look how thin that slice of pizza is. That's a flattening dynamic trend band. White line crosses over. Look at the spread. The spread is minuscule. Pull back to the signal line and up they go. Same old routine. Now on this one, the market was so strong, we did not get there was a reversal here, but we need to see a counter reversal like here, where a new sell channel opens up to create a second level trade. So this one just kept marching higher. There was, technically this up here would have been a third level move, and the rule is that we do not take, no third level trades are taken. So you'd have just used common sense and saw that this, although we didn't get the signal to make another trade, this was a third level move. Well, say you forgot that rule, or you just, emotions got the best of you, or you said, well, it's a very steep dynamic trend band, I'm going to take this trade anyway, and you did, you would have had excellent success on that trade, but it would have been against the rules. So I don't record it in the track record. What about this one here? Extremely steep dynamic trend band, white line crosses. The spread is tight, right? So wouldn't you go short here? Well, yes and no. You could have, but you got, first of all, you got spiky candles coming in, steep dynamic trend band. You could have taken it. It would have been a higher risk trade. I didn't record it in our track record. This was a stand-aside deal here. This is a stand-aside deal here with the colors flipping. After a big move to the upside, things are just kind of flattening out. So you remember that rule. After a long extended move, expect whipsaw. Your job is to expect whipsaw and to try to avoid making a trade into that whipsaw. What do? Sit and watch and relax. Don't get all hyper and think you got to trade. You're going to make, 150 trades this month. There's no big hurry. Would I have bought here? No. Would I have sold here? No. This is a fat channel. Should I have traded to pull back to the red line? Maybe, but you got to sit and use common sense and look at this. This is whipsaw. You could have considered doing that because the red lines were matching. Let's say you did. You got stopped out. So we had, I don't know, what have we had, 4 winning trades so far on this day, 1 stop out. Well, now what happens? White line crosses. The spread's tight enough here. Pull back to the signal line. And you return, come in with another winning trade. White line crosses here. Spread is at 48.75, 46.75, 2-point spread here. A little bit of whipsaw. You say you traded, let's see, the spread here at 46.5, 49, too wide here. You would have traded at the pullback of the signal line right here for a downside move. It would have held your stop if you got short earlier, but you wouldn't according to the rules because the spread was too wide. Here's where the spread's nice and thin. Pull back signal line, sell channel, down you go. Crossover here of the dynamic trend bands tells you what? Remember? Watch out, surge in that direction. It's not an entry point. It's just an observation of the market. No other system has a dynamic trend bands, so you have an advantage because when you saw that crossover, your system, Boomerang Day Trader, said, surge, hang on. So you're short and you're nervous like all traders are on every trade practically. I still get nervous after 25 years of trading. But I see his crossover, I go, I ain't getting out, surge, boom, down they go. In fact, I'm going to watch for a stronger move. But our rules here are 3 points. So we've got 2, 3, I forget exactly. I think 2, 3 winners, 1 stop out, maybe 4 winners. Final hour, you got this one. Okay, here's an example of a second level trade. Now again, 20 minutes for the market's closing. I don't think you're going to want to necessarily trade, but let's say you're one of these fanatics like me. I'm going to trade right up to close. Not such a good idea, but here's your counter move. Here's your second level trade. So say you're short here at 37. Well, they stopped you out. Here's another trade matching dynamic trend bands on the same side. You get short again here, right? And you make it all up in the last 10 minutes of trading. I would have probably stood aside with this, but if you did get trading in here and you just stayed on course, you'd have gotten stopped out here and made it back here. Gosh, where are we at? September 9th. So I'm doing my best here to cover all the days, but you know what? Even though we're going to have to stop a little bit earlier, I'm trying to show you these are the same old patterns repeating every day. And with Boomerang, you're not going to see this on any other system. They don't have the tools that we do. You're going to see these same patterns repeating. You're going to become so expert at these that you're going to it's like, okay, I own this one. I know what to do. Why? Opening market, screaming higher, expect whipsaw, right? That's the first thing you think. Steep trading line. Don't trade the first crossover. You're not looking for that. You're looking to see the market flatten out a little, and you're going to obviously be going to want to working the sell side because dynamic trend band number 2 crossed here, or number 1 crossed number 2. That's telling you get ready to work the sell side. New sell channel opens. It's the same routine. You wait for the sell channel to open, and then the pull back to the signal line. These arrows are not signals to get in. You don't want to trade down here. Sell channel opens, pull back to the signal line at 52.25, down they go. Trading doesn't get any easier than this. You may think this is complex if you're a beginner. Let me tell you something. This is how the markets are functioning today. If this was a white chart, you'd see it. All Boomerang is doing is giving you crystal clear information to organize the data. That's what we're doing here. We're organizing data. That's all trading ever is. You're taking data and you're organizing it in a way that you can make money out of it. This is only about making money. This isn't about indicatoritis or seminaritis or trading. If you're sitting there thinking, well, I'm going to go wait for the next seminar from the next guy, you're just kidding yourself. You're not serious about trading. You're just thinking you're going to go to 100 webinars and paste all that information together, and somebody's going to tell you trading's real piece of cake and real simple to do, and you just jump in and push some buttons. You're kidding yourself. They're lying to you, and you're kidding yourself. It's never going to be easy. It's called trading. It's like the example I gave you of football. If you don't want a broken ankle, if the thought of having a broken ankle and the pain of that is just so horrifying to you, do not become a football player. You're going to get a broken wrist or ankle or finger at some point. You see what I'm saying? You got to snap out of this illusion that the markets are ever going to be easy. I know that you have these asinine commercials on TV with a goofy little baby trading on his laptop or his cell phone. You got to remember, these people are not your friends. And I'm not against E-Trade or whoever that is, but those people sit in the boardroom and they don't trade, but they come up with these ideas and they get rewarded richly for coming up with the ad for the goofy little ass baby trading the markets. Think about it. They're actually insulting you. They're saying these people out there are such idiots that I'll show that even a goofy little baby who talks, which is kind of creepy, can trade the markets. So if a goofy little baby can do it, certainly you can do it. You see, that's the hoodwink. Wall Street's always been like that. Bring the lambs into slaughter. I'm one of the good guys in the industry. I'm trying to show you if you want to trade, first of all, face what trading is, and then find a system that really works that was built by a real trader. A lot of these guys don't trade, and a lot of them have only been around a year or so. So, again, not to sound like I'm tooting my own horn too much, I'm just trying to protect you. That's your trading friend Mohan there speaking. White line crosses the dynamic trend band number 2. You get a crossover of dynamic trend band 1 over number 2. That tells you what? Look for a surge. Same old routine, right? Look for a surge. Pull back the signal line, marked and dotted, right here in the charts. These dots will stay up on charts. Remember, I'm using NQ913. This contract went off the books weeks ago, but I saved it so I could do this webinar today. These dots are still printed on the charts. They will never go away. I could go back 5 years and they're going to be on there. Pull back the signal line, 3-point gain. A reaction, another move, but this was not a counter trend channel. Here's one here. Trade channel here, cross over the signal line, but what's wrong with this trade? Super steep dynamic trend band number 2. This is not a trade here. The spread's okay, but this is the problem, is this trade band is too straight. Even if you took this trade, which wouldn't have been correct, then you got stopped out. What would you have done? Well, here's a new buy channel, white line crossover again, pull back signal line, and up they go with a surge to the upside. So even if you took this incorrectly and got stopped out, you made it right back. White line crosses over, dynamic trend band changes color, spreads too wide, no trade here. The end result, choppy whipsaw action. Before the spread thinned out, you had green candles coming in here, which says don't get long. Well, what about trading a fat channel here? No, because this dynamic trend band here is still steep and not, if this was a reddish color or magenta like here, you could do it. Cross over here says surge to the downside, right? That's the rule. Now you're getting a pullback up here. Well, you brave soldiers, and again, this is not the rule, but if you see this happening here and you see this extended move and you say this thing's bound to reverse, you can see the prices stopped dead on right at the dynamic trend band number 2 and made a reversal. The proper way to trade this one would have been to see cross over here, new sell channel, pull back to the signal line at 70.5, and now they come to 67.5. 3-point move. That's why we use 3 points. That's coming right into the close, another higher risk trade. But I showed you mechanically exactly how it works. That's the purpose of these webinars. Now, I'd like to roll about 20 minutes more on this. I'll hurry up as quick as I can and just show you in rapid fire. And again, you can take the recording and go back over it and stop and start it. See, before you buy Boomerang, I know most of you on here today are owners of Boomerang, but before you buy it, for those who are looking, who shows you all their charts for a month and shows you where their exact trades were before you buy? Go to any of these other systems you may be looking at and ask them to do that. They'll tell you to take a hike. You know, they'll put you on your trading room and charge you some money maybe, but then how boring is that? You're sitting there all day while this market just ticks along and the guy's trying to cover it up with some kind of different talk about this and that. Point is, take you forever to figure out the system's very good. Why don't you just tell them, hey, look, just send me, or do a webinar showing a month of your trades in your system. Well, they're not going to do it most likely. I think, as far as I know, I'm the only one doing it. The point is, who cares? I just want you to win at trading. The trend band number 1 crosses under the dynamic trend band number 2. That's your first sign that's a bearish signal. That's a surge signal, right? Remember that? Well, it's 3 minutes after the opening, a little too early, but you get going up here, and now you see the dynamic trend bands matching. You might want to trade that pullback there. It's pretty bearish signal. Down they go. This is not a counter move. Yes, the white line spiked up across here, but that was after the channel had already been going for a while and turned fat. Not a good trade. Not a good trade to make there. Pull back here. Dynamic trend band is back on the same side. Both of them both matching. So you got some choppy action here, but here's on this candle is where the trade channel opened. Pull back to the signal line is right here at 83.75. They come down to 81, miss the goal, spike candles, counter spike candles, get out of the trade. 83.25, 85.75, you could have gotten out earlier, but if not, you got stopped out for 2.5 points. No big deal. Again, here it's crossing over here. You see that? And yeah, they get that spike reaction or surge reaction. Unfortunately, well, again, the crossover says it's bullish. The new buy channel says it's bullish. Pullback to the signal line comes in here, 84, and they spike to 88. I mean, you had to be fast, but it was a legit trade. Wasn't a fat channel because notice how tight everything is in here? That's a good deal. Fat channel is like this one. Here's a fat channel. First of all, look at this candle here. 88 to 84. There's a 4-point candle. Spike whipsaw says caution. New channel opens. They're spiking lower, no signal to here, pretty close to the bottom of the fat channel. Still, that trade ended up panning out. Not recommended, though. This is a fat channel, and what do you want to do? Well, if everything's matching, you could have traded a pullback here, the dynamic trend band. That would have been stopped out. If you got stopped out, no big deal. I believe I recorded that as a stop out on this trade in our recorded track record. Pull back to the signal line here at 83.5, and up they go for a huge move to the upside. Then they start getting whipsaw again. White line crosses dynamic trend band number 2 here. The spread at this point is 86.25, 87, very tight spread. So right here you would have nailed the short on this alarmed signal move to the pull back to the signal line. 85 came down to 80. There's your 3 points there. This is not a second level trade because we didn't get a counter buy channel. Here comes again. Remember, I told you this is the most whipsaw month I've seen in 25 years of trading. You can believe me or not. If you haven't been trading for 25 years, then you can't really argue with me, can you? You wouldn't know. If you've been trading 5 years, you would know. This is very crazy whipsaw month. Anyway, this is not a trade. The spread's too wide. Steep downside move. Now it's flattening. White line crosses over. Again, spiky trades. If you want to get in there, you see this cross over here. You say, well, it's going to surge higher. I'm going to get long. Pull back to the signal line. This is why we wait for a pullback to the signal line. You don't want to get long up here. You wait for that pullback signal line. They'll come in most cases. Got to be fast. 83.25 jumps up to 87.75. Counter trend move. Do we take a second level trade? Well, in most cases, yes. This candle produces a new buy channel. Pull back the signal line at 85, and up they go to 88. Just barely eked out a 3-point move. Now you got the white line crossing again. You got the new sell channel. Pull back to the signal line. Down they go. Another winning trade. Had about 4 or 5 that day. Here's another one. White line crosses. What's wrong with this trade? You're getting good at this stuff now, huh? Way too wide of a spread. 79.25, 75. Spread's too wide. What do? Wait for the spread to tighten. How about at this pullback to the signal line? Spread is 79, 75. Still too wide. Let this trade go. Unless, if you were fortunate and you saw this happening here, 79, 70, you might have said, I'm going to go ahead and buy him here because the spread was wider. But in most cases, you would have let this go. Otherwise, if you got long, you had another winning trade. I didn't record that as a winning trade. This one here, counter matching colors here. White line is just hovering over the dynamic trend band, and we're 10 minutes before the close. You wouldn't want to take this trade. Certainly wouldn't want to take this one in the 15-minute. You got to give yourself time for the trade to pan out. Nobody in their right mind would trade 10 minutes for the market's closing, but some do. They're called gamblers. You can always go to Vegas. A lot of action there. A lot of pretty girls walking around too. When you sit and look at your screen, you don't have that advantage. All right. So next day, I'm going to whip through these faster. Steep dynamic trend band, same old routine. This trade panned out for some reason. This was right on the close, so the closing or the opening, I mean, this is right on the opening. This is a West Coast chart. I probably should have mentioned that earlier. West Coast chart is 3 hours behind the East Coast. 6:30 our time is in the early morning, 9:30 on the East Coast. This would have panned out not an authorized trade. Trading near the opening, you just had to let this one go. What about up here? Well, spike to the downside, white line crossing. By this point, you got a fat channel forming, so you don't want to do anything with this one here. It's just, it's the opening time, first half hour. Nothing, the spread's too wide, so nothing to do here anyway. No trade to make here. What about this one? Well, you got the white line crossing over dynamic trend band number 2. We're just following the rules. The dynamic trend band number 1 is still red. You see that? Which does not confirm the trade. It has to be the same color. Dynamic trend band number 1 must be the same matching color of the trade direction, means the trade channel, and must be in close proximity to dynamic trend band number 2. It's all spelled out in the rules. It's crystal clear. It's very simple. Trading's not simple, but the rules are simple. If you can read English, they say exactly what to do here. This was not a trade because the dynamic trend band color did not match on dynamic trend band number 1. However, now that it's crossed below dynamic trend band number 2, what does that tell you? Little quiz for you. That's right. Watch for a surge to the downside. When the dynamic trend bands cross, it's not a trade signal. It's a wonderful early warning system that Boomerang has built into it, unlike any other system that says watch for a surge in that direction. So we get, we have some sell channel, buy channel. There's a lot of flipping around here. It's a whipsaw month. New sell channel on the downside. There was a pullback to the signal line within that new sell channel being signaled, because that's a separate signal. When these arrows show up, you'll also hear a separate, different sounding alarm sound, or you would have caught this pullback and down they go for a winning trade. Crossover, the white line here, spread is thin, up they go. Counter pullback, second level pullback with a pullback to the signal line at the same simultaneous time as a new buy channel opening up, surge to the upside, third winning trade in the row. Big extended move tells you what? Watch for whipsaw at the end of that move. Matching dynamic trend band colors here. Spike candles the upside, no trade. Don't trade at the top of a fat channel. This one you just have to wait and let the whipsaw play out, because it's just, as long as this dynamic trend band is on this side, the general tendency is going to be for that market to reverse to the downside. However, when they match in color like here, you could have caught this trade probably. Let's see what that looks like on the very far right side of the chart. The dynamic trend band, you see it's just changing color right at the microsecond this is all occurring. So you would have missed that trade. More whipsaw coming over on the other side here, but you want to focus on the sell side. Well, again, because of the nature of this month, the market was so whipsaw. Here's a sell channel and a simultaneous pullback to the signal line, both alerting in hyper speed at 77.25. They come down to 74.75. Then another counter reversal. It's not Boomerang's fault, folks. It's the market itself. Boomerang is just tracking it. Look at this. You've got matching dynamic trend bands on a new buy channel opening, a pullback to the signal line here at 77.75, and a move up to 80.75. So believe it or not, even in the midst of this condensed little contraction here, according to the rules, a 3-point trade could have been eked out of there. Based on what your fill was, you might not have caught it, and it would have been a problem. However, with the new sell channel opening on this candle here, and a pullback of the signal line, and a confirming dynamic trend band on the same sell side of the dynamic number 2, you would have taken a short here and immediately made up that loss if indeed that's what happened. You don't trade 5 minutes into the close here. Opening time here, pull back the signal line, down they go. I'm going to speed it up a little, have to. White line crossing over, pull back to the signal line, winning trade. Not a second level did occur here, but not confirmed with a arrow showing a sell channel. You got to have that to confirm the second level move. Unless, well, I'm trying to show you the mechanical method. I'm saying as you become highly experienced in trading with Boomerang and you become highly intuitive with how the markets work, you're going to catch some of these. But I'm just showing you the mechanical system for now. It's much better to do that. That's our goal. Okay, white line crossing the downside. We've got a fat channel forming. That's spike trading. The spread is too wide, so there's nothing to trade here. See that wide spread? But while the spread is thinning and the fat channel, forms, notice this. As the spread is thinning, the market does what? Jumps back to the red line, which is one of those rules. You can trade it there. It's kind of one of the unwritten rules. It's just I'm showing you how to professionally trade a fat channel. You can avoid it, which is the normal rule. Just stay out of the trade. But if you have the right configurations here, why not grab that trade to the red line, prepare. You got a crossover here, so you're going to get ready for what? Little quiz for you. I know it's getting long here. We're almost done. This crossover says what? Watch for a surge. So when this jumps back up to the red line, based on the configuration of trading a fat channel, you get short, and you got a really quick, nice, don't you love these when you get short and they just blast to the downside? Thank you very much. Oh, it's very nice to get out of those trades like that. More spike candles here. Again, the most whipsaw month I had seen in 20 years of trading. Spiking to the upside. White line crosses over the dynamic trend band. Spread is a little bit wide, but once we get down to this area, the spread is thinned out. Go ahead and buy them right here. Surge to the upside. Nothing going on here. It's a counter move. We're waiting for the white line to cross over the dynamic trend band. By the way, isn't Boomerang beautiful? Look at that. Goes right to the exact trend band. Doesn't cross over. Just keeping you out of that trade. The spread is too wide anyway, so now we got a white line crossing. Spike move to the downside. Nothing to do here. Let's see what we got here. Now, had you seen this, again, the spike candle is a little bit of a warning. Had you seen this and you traded the signal line here on the short side, 79.75, it would have stopped you out. However, when the better looking trade setup with the crossover, because remember what's going on here. See that? Right exactly here. Crossover of the dynamic trend band number 1 over number 2, telling you what? We just had this quiz a second ago. Look for a surge to the downside. Wow, there it is. New trade channel. Pull back the signal line, and down they go. Folks, do you see how this is really the same routine every day? The same routine, what I call boring profits. Winning trade after winning trade. You're learning how to trade the markets. You're not just playing games and try to take it easy and just push a button. I had a guy email me the other day. I couldn't believe he said, well, I swear to God this happened. And I know some of you laugh and some of you maybe think like him, which if you do, whatever. But he said, well, I got your rules and I read them. And he literally said, oh, if I have to be able to learn how to look for a fat channel and learn how to avoid choppy markets, well, then forget it. I don't want to do it. I answered back and said, what do you think trading is? You think it's just a piece of cake where you just push a button, buy or sell, and then you make all this money? You mean people that are out of a job, why wouldn't they just buy a push-button system and just make $20,000 a month? That's ridiculous. It's never going to be like that. Unless, you believe the goofy little baby commercials, well then, I got a bridge to sell you in Boston too, Anyway, the point is, same old routine. Market opens up here, white line crosses here, the spread is thin, pull back the signal line, up they go. Dynamic trend band crossing signals you to hold for a surge. There it is. Second level move here. Now this is a crystal clear confirmed second level type move. What happens? You get a counter arrow showing a sell channel. It doesn't set up a new sell trade. Then you get another reversal buy channel. There's your second level trade. That's how it works. Okay, that's the end of that chart, because what happened was you had option expiration. So I'm going to pull out my handy chart, which starts out right here. Let's see, 6:32. This is 9:20. So we're getting through the month. We've already gone. We got about 10 more days left in the session. We're getting close to an hour and 45 minutes. I want to wrap this up really quickly. Look at this. Just by the way, look at. I did have one trader email me about this. He's getting all cut up, and I'm going, why are you so desperate to trade right near the opening with giant spike candles and counter candles? Here's one down, here's one up, here's turns green, turns red, spikes down, spikes up. Why do you want to trade that? Do you see what I mean? You have to look within yourself and go, what's the matter with me? Why do I think I have to trade? Just sit and wait and let things become clear. That's all you got to do. So you got all this whipsaw here. Now you get a white line crossing over a new buy channel. And what do you have? You got a nice tight spread here. The whipsaw seems to have subsided. You buy a pullback to the signal line, and up they go for winning trade. Now things are smoothing out a little bit. Tight spread, white line crosses. These are the classic trades here. White line crosses, dynamic trend band, tight spread, pullback to the signal line, 3 points. Second level trade. See this now? Counter. See that arrow right there? Counter buy channel that doesn't set up a buy, and then a counter sell channel, pullback signal line. There's your second level trade. We do not take third level trades. This is a typical whipsaw reaction off of an extended move. See, I show you how to trade the markets. I don't just show you how to push buttons. Spike candles the upside, steep dynamic trend band. I mean, you know this stuff. We've already gone over all these charts. You just sit aside. Well, what do I do? Number one, calm down. You don't have to trade. Just calm down and let all this emotional stuff finish up. Then what? Where do I trade next? What about this trade? Is that a trade? No, because that's a third level trade. No third level trades are taken. Plain English. Says right there, no third level trades. I sent you this. You read it, right? Second level trade. This is a fat channel flip out at the end of an extended move. This is a third level trade, which we don't take. So here's a fourth level trade. What do? Spike candle, spike, just flying within 3-4 minutes, screaming higher, forming right here. It's called a fat channel. In most cases, you're going to avoid those. If you've got the right configurations, you can trade a pullback to either dynamic trend band 1, the red line, or the trade signal line, or the dynamic trend band number 2. In this case, if you had traded a pullback to the red line, you would have gotten stopped out. So we'll call that a stopped out trade. We've already had on this session 1, 2, 3 winners. This is not a trade. This is a third level, not a trade. This is a fat channel that you said, well, dynamic trend bands on this side, they're matching colors. I'm going to trade a pullback to the red line. Congratulations, that would have been a correct thing to do. However, it got stopped out. It does happen in trading once in a while. Well, now what? Is it bearish again? Well, the market has already been slammed to the downside. It's just whipsaw at the end of a bearish move. Got a fat channel here. You see that? White line crosses under the red line. Both of these are bearish. So what would you do? Well, you wouldn't want to trade at the bottom of the fat channel. Here's where you can go ahead and work that red line right there. Boom, 26 comes down to 20.75. You see how it failed here for some reason. I don't know. The markets were too bearish. This failed when it went to the pullback to the red line here. It's rare. If things are right and the configuration is right, like here, fat channel, pullback to the red line with the dynamic trend bands both matching, then you get your scalp to the downside. Nice fast. Love those fast ones. Fill your trade right away. More whipsaw. Now here's where, this is another sign. gray candle, red candle, green candle, blue dot, red dot, or pink, magenta dot, gray. That's whipsaw. However, the white line crossed the dynamic trend band here. You see that? Without a doubt, crossed it. New buy channel. Spread is fine. 21.75, 22.50. Pull back to the signal line. 22.75. Runs 26.50. Whipsaw. Most whipsaw month I've seen in 20 years. I'm showing you the proof right here. Coming to the close. More whipsaw. More whipsaw. What about this one? See, even using and following the exact system, you're still okay. Dynamic trend bands are crossing. New buy channel. White lines crossing. Pull back the signal line at 22.75. Goes to 26. The system works even when things are crazy. It's here to help you not go crazy. Matching dynamic trend bands with a new sell channel. That means sell at the pullback to the signal line right here, 20.75. They ran up to 22 and hit the dynamic trend band number 2 and pulled back to 18. It's a problem. Not enough punch. Green candles, 21.50. Just get out. Exit the trade with less than a 2.5 point loss. You're coming to the close. It's just whipsaw time. Okay, I am racing to get all this done in 10 minutes, and then we're going to have a little bit of time for those who want to stay around for any Q&A. I'm going to turn the recorder off. You'll have this recording of today. You can go over it. It'll be on our website forever, practically forever. In Spanish, para siempre means forever. Some of our trading friends I know are from South America. I see on here, and so I know a little Spanish. I love Spanish countries, Mexico, South America, beautiful places. The waterfalls, the beaches, wow. Okay, market's opening. Don't trade the opening. Let it whipsaw around, no problem. Dynamic trend band number 1 crosses number 2. What is the message of that? You should know this. I've quizzed you on it 4 times in the last 50 minutes. Watch for a surge. So far, you've noticed it's about 80% effective. That alone is worth the price of Boomerang, $11.95. If you just traded the crossovers on pullbacks, you'd pay for Boomerang in about 2 days, and then you'd own it for life. I don't gouge traders. I charge you $11.95 for the best system in the industry. Most of our sales are from referrals, and we're the top seller in Ninja Trader. Where can you go wrong? I've showed you the testimonials we have by floor traders and everything. Buy Boomerang. Follow my simple rules and be successful. Here's your short here at the pullback signal line. Down they go. If you decided this was going to be a really good move, you could have done the trailing. Remember I told you, use the space between here. Ideally, the dynamic trend band number 1 is your trailing stop. In some cases, you know, if you were trying to do this, you take one, put on 4 contracts, take 2 off at 3 points and trail the others. You might have held this out. You might have held it all the way to here. I don't know. I'm just showing you the mechanical system here. What's wrong with this deal here? That's right. Spread's too wide. Dynamic trend band is too steep. They're stubbornly trying to get bullish here. You got a crossover here, a mini surge. Now here's where a surge didn't work, but I can tell you exactly why it didn't work. Can you answer it yourself? For those of you who are still with me here and paying attention, I sure appreciate it. The dynamic trend band is very steep. It's very bearish. There was a small surge, but in this case, the surge failed. The dynamic trend band's too steep. This thing is too bearish. Down here, look at the indicators down here. Everything's still red. Little bit trying to bubble up over the 0 line, but not much. And then when everything turns red back down here, I haven't even gone over these bias indicators. These are incredible. Hyper scalp and all these. I'm just showing you. These are confirmation. All we're doing here today is using the dynamic trend bands, and I'm showing how just using those is all you need. So for those who really want it simple, it doesn't get much simpler than this. Matching dynamic trend bands here, trade to the signal line, huge surge to the downside. White line crosses over here, spike higher, wait for a pullback to the red line, there it is, or halfway through the fat channel, up they go. This is a counter trade, so it tells you without setting up a new sell trade. It tells you look for a second level trade, right? What happens? A surge off this second one, creating a fat channel. So what you want to do is go up there and say, wow, fat channel. Don't buy this. You can buy it, but you're going to get stopped out in most cases. Wait for at least a 50% pullback, which took you to where? Isn't this amazing? Right to the dynamic trend band number 1, or in this case, the red line, which we're very close. Look at that. Stopped exactly at the red line. Isn't Boomerang incredible? And then they shot up for another 3-point winner on a second level move. Level 1, counter trend. You got to have that arrow, counter trending. And level 2. Here's the same thing, a counter trade. We don't take third level trades. Isn't that amazing? No third level trades are taken. Isn't it amazing how these rules are so simple, easy to memorize? I'm quizzing you on them. I know you're getting all the answers right, and it's the same old routine. You'll become expert at the markets in no time. Surge higher, third level trade, just forget it. Just ignore it. Just go get something to drink, take a break, walk around your office, stand up and do 10 jumping jacks. Get that tension out. It's tense business. Coming into the close, you've had 5 winners in a row. Forget it. Just forget it. Let's get this thing going here. I just want to close this up. We're not going to go through the entire session. We're on 9:24, so we're only got 5 sessions remaining. What have you noticed about all this? On the choppiest month I've seen in 20 years. The same old routine, the same pattern. You want it to be the same old routine. You don't want new. There's enough excitement in trading. You want it to be clear, and you're not going to see this on other programs. This is Boomerang Day Trader. I've outlined this for you. I've researched this for years. I've been trading 24 years, and I'm identifying these crystal clear patterns for you using the dynamic trend band so you can go in and make a real trading lifestyle for yourself. You can take your wife or partner out to dinner. You guys can travel around the world when you take trading breaks. Look, if you had traded and duplicated my results in August and September, you'd be in Hawaii by now. It's cold. It's cold here in America. You'd be in Hawaii by now. You see? Take a few weeks off. You're going to come back to what? The same old routine. You're going to come back to the dynamic trend bands crossing and creating a surge in the markets. Here's another one, surge. Here's another one. Here's another one. You see, you're going to come back to the same nice, simple routine. Trading is not easy. Trading is difficult, but the method that I'm showing is simple. Dynamic white line crosses over. The spread is thin. New trade channel to the downside. There you go. No second level trade. White line crosses over. Spread's too wide. You wait for the spread to tighten. Here's where it's tightening. Here's a pullback to the signal line. Up they go. No second level trade. Steep move to the upside. Watch for some whipsaw. White line crosses over. The dynamic trend band crosses here, telling you, I should probably go short. Get short here. 24 even or so. They come down to 21. Just barely eked out 3 points. A lot of green candles coming here. Be careful. Maybe get out a little early if you have to. It's the way it goes. Get stopped out. No big deal. White line crosses up over here again with matching dynamic trend bands. Pull back to the signal line right here. See that? 27.75. Up they go to 30.75. Exactly 3 points. That's why I recommend taking 3-point trades. Someone asked earlier in the questions, why 3 points? Why not hold for these surges? Well, because if you're just steadily picking off 3 points with 4 contracts, making $240, and you're successful at doing that 5 to 6 times a day with a stop or so, stopped out trade and they're thrown out, you're going home every night with that nice, hypothetically, you're going home with that $500 to $900 a day, and now you got what? A job. In this jobless economy, you've got a job. You go in every day to your field, to your office, to your arena of business, whether it's a corporate office somewhere or whatever. See, it's the same thing. You're going in your special room, turning on your computer, and here's your job right in front of you. I'm showing you it right here. It's Boomerang Day Trader. And you go, okay, white line cross the dynamic trend band number 2. The spread is thin. Boomerangs makes an alarm signal, a Roadrunner alarm signal, and prints instantly in a millisecond on the chart. I go over to I have my platform up. I hit sell market. It puts brackets up here with a 2.5 point stop up here that'll take me out automatically, a 3 point stop down or gain that'll take me out here. I sit there and I professionally watch the market. I see the dynamic trend band crossing. I say, oh good, my short will probably pan out. Well, the fact is it already did, because you were short at 26. They came down to 21. You already got more than a 3-point gain here. You see the surge here. This is not the exact mechanical system, but you get good at Boomerang, and what are you going to think? Wow, there's more to this downside move. You trade a pullback to the red line or the dynamic trend band, and down they go for another one. You see a counter trend move here. See that arrow? Doesn't set up a long trade. New arrow to the downside, second level trade. So you see what I mean? You could have theoretically even squeezed in 1, 2, 3 moves on a second level move. Now, I'm not recommending that. This is for you guys out there. I know you're out there because I get your emails all the time, who have been using Boomerang for a year or so, and you finally get a clue that, wow, yeah, there are other opportunities. There's plenty of them, but I'm just showing new traders and those who are interested in Boomerang exactly how to trade a simple mechanical method and produce those kind of, $15,000 to $20,000 months I was talking about. No trade here, and you're coming in the close. It was just down, down, down. Tough month. One more session, and then I'm going to end this recording so we can get it up on YouTube. I can get it out to you. Here's the opening, surge the downside, fat line, nothing going on here. You just got to let this play out. The market's moved here. Dynamic trend band is on this side, suggesting that it's a bearish move. Whenever the dynamic trend band crosses one side, the tendency is going to be to that side. As you can see, it was exactly that. So now we're going to be on the lookout for a new sell channel to open up here. There's the arrow right here. Sell channel open up, pull back the signal line at 5 1/4, and down they come to 1 1/4 for 4 points there. Counter trend move, second level move, trade back to the signal line at 350. Down they go to 97 quarters, 6-point move. Counter spike, whipsaw move, fat channel. Don't trade at the top of the fat channel. You got a crossover, and you got to pull back to the red line. You take the trade, and it gets stopped out. Why? I don't know. Why is the sky blue? And if you know that, can you describe the color blue to me? Go ahead. Give it a try. Why did the dynamic trend band cross over and the market didn't surge the upside? Why is the sky blue, and describe the color blue? Just the way it goes sometimes, I'm a philosopher. You probably figured that out. So as soon as you figure that out, email me. In your email, describe exactly to me what the color blue looks like without comparing it to something else. Anyway, white line crosses over. By the way, these are called bias accelerator alerts. For those of you who are new to Boomerang, they're built into the system automatically. We're the only system that has them. They're exclusive to the industry with Boomerang. I developed them with my brilliant programmer. They occur after a specific chart pattern is set up, and it's just like a crossover surge alert. They're just an additional alert on Boomerang that gives you more of an advantage in trading than people with other systems. So you see I can show you, look at these bias accelerator alerts. Here's one here, here's a downside, right? Here's one here, downside. Here's one here, upside. Here's one here, downside. See what I mean? They don't always pan out. I'm not saying that. I would say they're about 65 to 75% accurate, maybe 70. Sometimes they'll get on a roll and there'll be 10 in a row and they're just perfect. You just want to cry. They're so beautiful, It just works so well. Anyway, forget those for now. Keep them in mind when you look at these charts. When you buy Boomerang, we have a full explanation and a whole video on them on our blog. Just go to Boomerang Day Trader, boomerangtrader.com. Go on video tutorials and look at the very first video tutorial on there that explains all about the bias accelerator alerts. It comes with Boomerang. It's only $11.95 for Boomerang. If you followed what I was showing you today, you could pay for it in a day. winning trade to the upside here, winning trade to the downside, spike move to the upside, whipsaw on an extended move, pull back, winning trade here, second level trade here. Again, look at that candle. This is just whipsaw, and you learn how to avoid it by trading with Boomerang. You see the crossover, the dynamic trend band, pull back to the red line, they surge higher. More whipsaw, just nonsense. You got to try to avoid this. You may have to sacrifice one of the soldiers, meaning one of the trades, and then say, whoops, nope, too much whipsaw. I'm going to stand aside. Take a break. Take the rest of the day off. No big deal. You got 4 or 5 winning trades in a row, $1,000 in your pocket. Take the rest of the day off. So we have gone to 926. There's only approximately, as far as I know, in that month, what do we got here? So only 2 more sessions. I'm going to ignore it. I'm going to end the tape here. Ladies and gentlemen, thank you so much for sticking with us. Now, I'm not done just yet. I'm going to turn off the recording right now. You will have this on a recording, and let me do that right now. Okay.